comments, questions that you might have on Twitter, just use the hashtag at the bottom of your screen, which is actually hashtag MKTDAY, or email us yourmoney@skynews.com.au. From uranium to broader resources, it was a great day for the material and gold stocks, Julia.
It was a fantastic day, and I think part of this is a weaker US dollar story, and that's really helped commodity prices. In fact, if we have a look at how the Aussie dollar is trading at the moment, above 92 US cents. And of course, we've seen some stronger than expected trade numbers coming out of China last week that has really helped the commodity space. So if we have a look at gold stocks, we've seen gold stocks like Newcrest Mining up by 7.9%. And before you think that it's because of its result, I think it's more because of the gold price, because if we have a look at some of the smaller gold players like Evolution Mining, we've seen a massive 18.7% lift today, and Panos up by 10.3%. So the fact we have seen gold prices recovering during the Asian session really helping the gold players out. Iron ore was the other big area. We've seen iron ore prices now in a bull market up by more than 22% since the 1st of June. And really helping along iron ore prices is the fact that we haven't seen the seasonable weakness that we saw last year. It looks like inventories are still relatively low in Asia. And of course, those iron ore players really jumping quite strongly today, with Atlas Iron up by almost 10% in one session and Fortescue gaining 7.5%. So that material sector, a real standout. The banking stocks also doing their part on the market today. Commonwealth Bank in focus ahead of its full year numbers on Wednesday, and we're expecting to see a rise in dividends. So all in all, it was a fantastic session for the Aussie market, up by 1.1%, and we finished above 5,100 points for the Aussie market. So we've done that a few times in the last week. Hopefully we'll be able to stay above this mark, and that would be good news for the Aussie market.
This space, David Jones inking a deal with Dick Smith in regards their electronics department. We saw David Jones shares, probably also helped by JB, but up about 5% today.
Well, this looks like it's a great idea for David Jones. The electronics division has been a loss-making division, and in fact responsible for more than half of the negative sales growth that we've seen in the year to date. So the fact that they've inked this deal with Dick Smith, this will turn this division into a profit centre rather than a drag on earnings and on sales. So altogether a positive move. It looks like Dick Smith will be paying a minimum amount to David Jones and a percentage of sales after you take out things like inventory, fittings and fixtures, as well as staff. So altogether the market liking this, because we're seeing electronics becoming moving from a loss centre to a profit centre. I guess the thing with this deal though is it doesn't include things like white goods, as well as small appliances with David Jones will retain, but altogether it does look like it's good news for the revenue as well as for the earnings line.
And just finally, to round out the reporting season, a wrap, UGL today, not the most amazing of earning report cards, but the demerger obviously had been speculated, and it came out and confirmed.
I mean, the earnings result was nothing spectacular at all. The underlying result coming in at $92 million on the lower end of expectations, which was between $90 to $100 million. But today the share price action was all about the demerger, and in fact unlocking value from the property area, probably more so than the engineering area. We did see some of the strong gains from the morning pulling back though, and that's because this demerger is likely to take a bit of time. They're aiming for FY15 to complete this demerger, so it looks like they want to try and help along the engineering group and some stabilisation there before they look at the demerger. But of course, if we have a look at engineering versus property, engineering, we've seen revenues down by 28% in this result that came through today, while in the property section we've seen revenue up by 21%. So it's really the property area which is seeing momentum at the moment, while the engineering is really quite a drag. So hopefully separating out the two, we will start to see an improvement in the engineering, and we'll be able to see UGL leveraging off that very strong property business that they have, which doesn't have the attractive margins that some of their competitors in the market are getting at the moment.
All right, Julia Lee, got to leave it there. We'll talk tomorrow. Thanks a lot.
Thanks.